As you near retirement, one of the most important things you'll need to consider is how to protect your portfolio from inflation. The rising cost of living can quickly erode the value of your savings, and the last thing you want is to retire with a portfolio that no longer stretches as far as it used to. But don't worry, there are strategies you can use right now to adjust your portfolio and keep your wealth secure. Now, if you're serious about protecting your wealth and ensuring it lasts throughout retirement, be sure to check out the first link in the description below. Thousands of Americans are turning to gold IRAs to safeguard their savings from inflation. In fact, if you have over 100K in your IRA or 401k, or even up to 5 mailers in savings, this free gold IRA guide could be the most important decision you make for your financial future. So make sure to grab it while you can. Let's dive into the ways you can start adjusting your portfolio to make sure it's inflation proof. First, you'll want to think about diversification. If your portfolio is too heavily weighted in traditional assets like stocks and bonds, you're leaving yourself vulnerable to inflation's bite. Stocks can lose value in high inflationary periods, and bonds can see their yields wiped out. To counter this, you need to start adding inflation-resistant assets. That's where precious metals like gold come into play. Gold has been a reliable hedge against inflation for centuries. When inflation rises, the value of the dollar tends to drop, but gold usually goes the opposite way. This makes it a natural choice for protecting your purchasing power. And while stocks can sometimes be volatile in uncertain times, gold tends to hold its value and often even increases during market downturns. Now, you might be wondering about other options. Some people look at real estate or TIPS, Treasury Inflation Protected Securities. Real estate can be a solid investment, but it's not as liquid or easy to manage as gold, especially when you're transitioning to retirement. TIPS are government-backed and designed to protect against inflation, but the returns can be lower than other investments, and they aren't as consistent as gold. So, how do you actually adjust your portfolio? A great place to start is by allocating a portion of your investments into gold, especially through a gold IRA. If you have an existing IRA or 401k, transferring a part of your savings into a gold IRA could be the simplest way to start. It's tax advantaged, and it's an easy way to get exposure to the gold market without having to deal with the hassle of physical gold. Plus, it gives you the flexibility to adjust your holdings as inflation evolves. Beyond gold, you can also look into adding commodities or even foreign currencies to your portfolio to diversify your inflation protection strategy. But again, gold remains one of the most straightforward, reliable ways to shield yourself from inflation. It's not too late to make these changes. In fact, if you're nearing retirement and your portfolio isn't ready for inflation, there's no better time to act than now. I encourage you to take that first step and check out the free gold IRA guide linked in the description. It's a must-read if you want to learn why so many retirees are choosing to protect their wealth with gold IRAs. And if you're serious about securing your wealth in the next 2 weeks, this could be your best move. If you're an American retiree with 100K or more in an IRA, 401k, or even 5 million plus in savings, this is the kind of information you need to consider. Protecting your wealth from inflation starts with the right strategy. And for many, that strategy starts with gold. So, click the link below, grab your free guide, and start securing your future today.